Value Stack podcast is now sponsored by Coinbase.com. If you need extra one-on-one time to get your Bitcoin questions answered, book a call with a Bitcoin pro at Coinbase Connect to get expertise you need with topics ranging from security, privacy, mining, Lightning Network, and more. It's easy to get started. Simply go to Coinbase.com, click Connect at the top of the page, and book a call with the pro for the topic that you'd like to discuss. So thank you guys at Coinbase for sponsoring this show, and check them out at Coinbase.com to get the Bitcoin support you need. Now, on with the show.
All right. Welcome to episode 7 of Value Stack, where we talk all things value investing and stacking sats. My name is Bo. I also go by Shaper Funds, and I am here with my esteemed co-host and good friend, Zach, BTC BAP. How you doing?
Good, man. Good to do another recording here. Lots happened. We're sponsored now. Bitcoin touched 50K again. The second time or third, fifth time. I don't even know how many times, depending on how you're counting. But we're certainly in a little bit of a healthier environment than we were a month or 2 months ago. Let's see. We're going to cover. I guess we're going to talk about that, kind of the renewed strength in Bitcoin. I know you want to talk about Jack Dorsey and kind of his all in Bitcoin. I think we were going to cover Coinbase and kind of their opening up the casino even further. Titan too is getting active in the crypto space, so we see more of like these investment firms doing so. And then I think you had some questions that you wanted to kind of break through about value investing in Bitcoin, so we'll get into that too. What else we got today?
Yeah, I want to talk a little bit about modern portfolio theory and how Bitcoin fits into a diversified portfolio for like the average American, not people down the rabbit hole like you or me or probably our listeners. But I want to talk a little bit about that as well. And then also want to ask you, you ran into Preston Pysh at BitBlock Boom. Tell me a little bit about that.
Yeah, Preston, he's the host of the Investor Podcast, the Bitcoin edition of it, and just met him at the hotel bar and was telling him about our podcast and really giving him such praise for kind of opening our eyes, both you and I, and helping us get down the rabbit hole and see how Bitcoin makes sense from our financial, perspective. So we were just talking about that, and I was telling him about our podcast, and kind of jokingly was like, "Hey, Preston, you should come on the show." And I was like, "We only got like 100 listeners, but," and he says, "We'll have more after." Man, I love the Bitcoin conferences. I was fortunate to be able to go there for work and get to meet all these people like Preston. And just like it's one thing to talk to these people on Twitter and follow them on Twitter, but to get followed back isn't a whole nother but it's really more about meeting them and forming relationships. Like I think that of course, like we don't we're not a big podcast yet, but like I think that it's this sort of like meeting people face to face. It's almost like rare. It's like a Charizard or something these days. And there's just a sort of visceral connection that you make with someone when you're in person, which is why I miss you being, I miss that you're all the way in New Mexico now, because I don't get to see any in person anymore. But man, it was cool. Yeah. We're gonna have Preston on here, guys. So if you're a listener, message Preston and say you want him to come on the Value Stack podcast.
Yeah. I just want to give another quick shout out to Preston, because I came from the same line of thinking, the kind of staunch value investor, Graham Buffett sort of intrinsic value type investing is how I got into it originally. And seeing a guy like him transition from that to Bitcoin helped me open my mind because, of course, conviction comes from within, and I had to go down that journey myself. But having someone like Preston Pysh do that before really kind of helped me open my mind and learn a lot. So shout out to Preston.
Yeah, man. A lot of people, him, Plan B, Greg Foss, like some of these people from the, historical financial world. Kathy Wood. You saw Fidelity came out with their price target. I forget the guy's name. He's the head of Fidelity Digital Assets in research, if I may. I may be wrong on his role, but he used the Plan B stock to flow model, which, if you're not familiar, the stock to flow model says that based on a certain supply, how much new supply is created and what kind of pricing pressure upwards does that put on it. Gold has it. All natural resources do. It's sort of like your inflation measurement of a resource in that way. And so Bitcoin has like this stock to flow model, which has been a pretty good barometer of like where the price will go within a band, right? It's not exact, but it's got a range. And anyway, Fidelity used this as the lower bound. It was the upper bound. So Fidelity used their supply model as the stock to flow, and then the demand model was a different model. And the demand was like a floor of $1 million in like the 2030s, and the supply model, which I think is the stock to flow, they used in there, and a price target on the upper end was $1 billion per Bitcoin, and that's Fidelity. So it'll be somewhere between $1 million and $1 billion in a decade. Either way, we're at 50K, so it sounds like a good deal to me.
Right. Yeah. Clash of Worlds, traditional finance and Bitcoin, and this next decade we're going to see the two really combine, and I think that's kind of a good transition here. Want to talk about what Jack Dorsey's doing with both Square and Twitter, and kind of juxtapose that with what Coinbase is doing and what Titan Invest is doing, because I guess starting with Jack Dorsey, so CEO, founder of Square and Twitter, seem to be implementing Lightning capabilities into their offerings, and all in on Bitcoin. No shit coins.
Mm-hmm. Good to see.
Good to see.
Good to see. Yeah, I think they're working with Strike, the Jacks of the Bitcoin world unite. Jack Mallers, if you're not, for those who aren't familiar, and Jack Dorsey. They are working to integrate Bitcoin Lightning payments. Also, Fold announced recently that they are going to be phasing out on-chain and going 100% Lightning withdrawals. And in that, we'll be getting rid of, I imagine, I'm inferring here, but we'll be getting rid of the 50,000 sat withdrawal minimum in order to take money out. So a lot of adoption on the, kind of institute, like corporate, side for Lightning recently. It's been cool to see. And then, while Twitter's doing that, they're also, remember, working on Blue Sky, which is their open source version, which, I mean, come on, if Twitter's going to enable Bitcoin Lightning payments, then certainly the open source version of Twitter will do so. And then, Square is building this hardware wallet, and Square also just bought Tidal. I see a future where Lightning streaming is integrated into Tidal, and you can pay artists directly for streams and via Bitcoin, like streaming sats to them. Maybe it seems very obvious to me just because I've been in the space a minute and like understand kind of how these strategic moves are working from a higher level. But you just got to think that like Jack, like from a high level, is just going all in on Bitcoin. I mean, he said at the conference, if I wasn't, CEO of Square and Twitter, I'd be doing everything Bitcoin. Well, I think he's doing that anyway. He's just making both of his companies Bitcoin in the way that he can, Bitcoin integrated. Also,
Yeah,
Square,
it's
the Cash App, they they made a new tab, and this seems small, but they used to group the stock tab and the Bitcoin tab together. Now Bitcoin has its own tab.
hey, hey.
They don't want to get them confused. Stocks and Bitcoin are not the same. It's right next to the dollar tab. It's like dollar, stocks, Bitcoin. I like that.
Yeah,
I
yeah.
think it's smart to separate it.
Kind of big picture, he's moving away from an advertising revenue model. And if you look at what social media has done to the world over the last decade and a half, you know, having all your revenue come from advertising creates really perverse incentives. I don't think it creates the best experience for users. So implementing Lightning in a way where you can put out good content, and it's more, in my opinion, more of a meritocracy and less of not sure if I'm saying what I'm trying to say, but
No, I know what
I
you mean though. It's not like pay for play. It's people have been moving. Pomp talked about this on his podcast the other day. I forget who his guest was, but they were talking about just the kind of the multi-decade trend of pushing towards centralization in the name of convenience. And now we're sort of waking up to the fact that we compromised a lot of our privacy for those conveniences and are starting to go back. And I don't necessarily think that people are going to be the ones that do it, because people a lot of times don't care. But it's more going to be like the onus is on the companies, the developers, to incorporate these privacy enhancing features innately.
Yeah.
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 I mean, the more data that any company collects, data is information, and information is everything is information. If you want to go to like a subatomic level, like literally everything is information. So collecting more information, you don't even know what sort of connections and patterns that you can recognize that may be existent, that without having the data, like it's possible to know. So my headphones are going to die. And we're back after some technical difficulties and about an hour later. So we were talking about the open source kind of movement that the jacks are enabling, and we'll just pick it up from there. Show must go on.
The show must go on. Quick shout out to us, because this is our fourth time trying this recording today. So perseverance. But yeah, so let's talk about like what Coinbase and Titan are doing, because it's entirely different than what Jack Dorsey and Jack Mallers are up to. I guess because they're really focused on a lot of altcoins or shit coins, if you will.
Right.
Coinbase is increasing their treasury of cryptocurrencies, but they're doing so at the same allocation as their customers. Is that is that correct?
Yeah, because apparently retail investors know how to allocate portfolios. Yeah, Coinbase is buying ETH, NFTs, the whole shebang, and Titan, which has been sort of an actively managed, more tech focused investment firm, which has done really well. Like, I give them credit. They have embraced the crypto mantra. I think their largest allocation is Ethereum in the portfolio, then Bitcoin, then Cardano. Yeah, it's a similar approach. It's like diversify across crypto as opposed to looking at Bitcoin as a cash allocation. That's how I see it that way. Like, that's the two sides, that you either play it as crypto, which it's like coin agnostic, or it's Bitcoin that's really the only thing that matters. Those it goes either way. I mean, like, where I stand, but like, look, like, it's not that there's not money to be made in crypto. Like, Cardano, for example, has went up, I don't know, 300% in the last like couple months, and Bitcoin isn't. So, if you were to trade those coins for Bitcoin, like you have more Bitcoin. So it's not that like it can't be done. It's just that like I focus on value investing, right? Like and like those to me are more like high growth speculative investments, and it just doesn't fit with my risk profile. And I think part of what we could do, on the show is help people kind of understand the difference between Bitcoin and crypto, because Bitcoin to me is like the one of the, my friends don't agree, but maybe you do, but like to me it's like one of the safest investments there is. It's safer than cash in my mind, over the long term. And equity markets have all kinds of other risks, and so do bonds, and like to me real estate too. So to me, like Bitcoin is kind of like the absence of investment. It's more of like the risk averse move, which is why I don't invest in crypto, because I know that I could potentially earn more Bitcoin by doing so. But it doesn't fit my risk profile. And that's part of investing, is knowing your risk, knowing where you are you risk averse or not? Again, Titan, for example, is a super high growth investment strategy, as their equity positions have been. So it's not surprising that when they launched a crypto portfolio, it wasn't Bitcoin, because Bitcoin is the kind of the risk averse way to play crypto. What do you think about
Right.
that?
Yeah. Yeah. They didn't go out and buy a bunch of Berkshire Hathaway with their equity portfolio.
Right.
And of course, there's nothing you can really compare Bitcoin to. And I kind of say that tongue in cheek, but that is kind of how I think about it. It's like, if I don't want to have to worry about anything, I'm going to buy Bitcoin. And I mean, Bitcoin is opportunity cost. And I know that's how we see it. And I think eventually the world's going to see it that way. But for me personally, I wouldn't have the conviction to hold any cryptos through a downturn.
Yeah.
Um, and it's easy to say, why don't we just trade some altcoins while the market's going in the right direction? And that's all fine and good. And people that do a ton of research and are good traders, by all means, like that doesn't bother me at all. But it's certainly not for me. And yeah, that's where I stand.
Yeah. I mean, part of the reason I store my value in Bitcoin is so that I don't have to keep up with the markets constantly. That was one thing I didn't like about being a financial advisor, was just the constant up and down and up and down. And most people say, well, like Bitcoin, yeah, right. Like Bitcoin's super volatile too. But it's like I don't get worried when Bitcoin goes down. And maybe that's brainwash, but maybe it's education. I understand how it works. I understand the process of monetization, and that it's volatile to the upside. With a long enough time frame, it's not really volatile to the downside. Not not yet, at least. I mean, disclaimer here, right? But I think that like it makes sense. And if I was going to invest in crypto, which I'm not, but I would do it with someone like Titan, because they are like we're talking about, like it takes active management, it takes an edge. Bitcoin just takes patience, and that is what Titan is really good at. They're good at like finding the market sentiment and playing the trend, and like so for that reason I understand why they're going that approach. And again, if I was going to do it, I would have somebody manage it, because I don't want to do that. Like it's about like simplifying my life at the end of the day. That's what to me, that's what making money is about. It's like a means to an end. So if you have to spend all of your time to make money, then is it really getting you to the goal that you want? Not personally.
Now, this kind of dovetails in perfectly to what we want to talk about next, which is that, let's just have a little discussion as to what kind of value is being created outside of Bitcoin. Because I'm just curious what you have to say, and we haven't talked about this offline, but what projects, or however you want to phrase it, what outside of Bitcoin do you think is really adding value to society?
Are we talking about like in the crypto space?
In the crypto space. Yep.
Okay.
Yeah. Sorry.
Put me on the spot here. I think the only Oh god, the only real part that I'm excited about uh is like the connect interconnectedness between our physical world and the digital world, in the name of like metaverse, video games, things like that. Um, I grew up playing like World of Warcraft and like games like that, and I see how like in-game gold and stuff like that, like they're or like rare items, like non-fungible, or they would be fungible. No, they'd be non-fungible. Well, there'd be a few of them, but like unique items where there's only like X amount on the server, like rare swords, rare guns, skins, like things like that that could be traded for Bitcoin, because maybe Bitcoin doesn't quite have that functionality. Um, but I still like I wouldn't want to trade my rare sword in a in a RPG game for some other token. Like I would want to exchange it for Bitcoin. And I think the Lightning Network is probably where that winds up going, which is why Jack Dorsey, Jack Mallers, they're like they're going that route. Zebedee.io, which we've got a right here is a QR code you can tip us, just by scanning with Strike or any Bitcoin Lightning wallet, and you can tip us as little as one Satoshi up to like $10 worth. But like Zebedee's doing that for gamers and for streamers, so I think like that excites me. But like it's still Bitcoin, really. Like maybe there's some like chains that like use it as a peg to the game and like for functionality, but I don't see the value. Like I don't see the value of the like the things like Uniswap. Like I had this conversation with a friend of mine who's a big altcoin trader. Think like Uniswap is a cool idea. It's this like anybody can show up, become a market maker of two assets, and provide liquidity at a pre-specified price range and earn yield. And likewise, it can allow any other person to come in and trade from that market that that person made. That's cool. That's a cool idea. It's an idea. It's not a token. And like that's why the SEC is investigating Uniswap, because they have like job listing on Angel List. And like where does the token come into play? Like Uniswap token, I get the project. I understand the utility of it. I think it's a cool idea, but like, what's the purpose of the token? And it's like I get that for every project, and I'm like, okay, cool project, cool idea. It's a company. The token's just a cash out mechanism for the founders. And so it's like, while the things that are happening in the crypto space are exciting, not from an investment standpoint, from a technology standpoint, sure.
Right. Right. Yeah, it does feel a little bit like a Cambrian explosion of innovation. Um, but so did the internet during the dot-com bubble. And I think
Right.
that like some of what's being tested in the like NFT space and stuff, like a couple percent of it is gonna like turn into something important and big, and it'll morph into something that's unrecognizable 10 years from now. Um, but I think the vast majority of what's going on in that space, it's insane.
Well,
Blurry JPEGs are trading for millions of dollars, and
it's casinos. It's just gambling.
and every single day, I'm on Twitter watching this stuff. Every single day, there's a new series, like something else shows up on OpenSea, and
The
how
apes.
many
Yeah.
thousands crypto punks. Okay, there's rocks, there's were the hamsters or something. Um, but
Let's
it's
not
like
even
every
give them a
day.
platform. I don't even want to
Yeah,
give them a platform.
every
Like,
day there's something else. It's like it's not scarce at all. What is the
it
point?
it it's not, dude. And here's the problem with blockchains in general with tracking real world items. Like they run into something called the oracle problem. So a blockchain can track anything, but it can only enforce ownership of its own native currency, its own token. Like use the example. I think Gigi did this in a tweet storm where it's like you can say like, okay, here's a banana and I own this banana on the blockchain, and you can verifiably say that I own the banana. But like when the banana spoils, it still says I own the banana. And it's like you have this like data link issue. And yeah, it can enforce that I own this banana, but like the outside world is not connected anymore. Or like the house, like, okay, let's say we move real estate ownership to the blockchain and track it all there, but then like the house burns down. And it's like, okay, yeah, I still own the token of the house on the blockchain, but the house is rubble now. So like, whereas like when it's enforcing its own native digital asset to the chain itself, that's like it can verify and enforce, not just track. And I think it was Parker Lewis that wrote this article called "Bitcoin Not Blockchain," and I still stand by this. I really am not bullish on proof of stake, and in the short term, that's of course been on not a great investment strategy, but it's a saving strategy. Bitcoin's a saving strategy.
Right. Right. So let's transition to the boating accident of the week.
Oh, it's the boating accident of the week.
Zach, who's our boating accident? Who was in our boating accident this week?
This week, it's Busta Rhymes. Busta came on Bitcoin strong, man. I loved it. He was like getting into it on Twitter. Literally, we're all there trying to help. Next day, he starts asking about NFTs. He's Busta, you're not gonna make it, dude. Yeah, dude. Bitcoin, not blockchain, like we were just talking about. It's exciting. It's interesting. You could probably make some money on your reputation on the NFT space, which is how I think anybody really makes money in that space. It's all Ponzi. It's this like next person has to pay more than you until it stops. The route is Bitcoin, Busta, not NFTs. So, he's still new, so we'll give him like we'll give him a grace period. But the cyber hornets, they're vicious.
Have fun staying poor.
Oh, have fun staying poor, Busta. Even though you're probably way richer than us. Gotta know.
Cool.
But I'm glad to see people like asking questions like that. Even though, if he stays on the NFT train, I'm gonna have to stop playing past the Cavassier. But we'll give him a minute. But it's not looking good.
Yeah. Cool. Well, I want to wrap up today's episode with a little modern portfolio theory. And for those of you who are not familiar, modern portfolio theory is, I'm actually just going to bring up the definition because I would not do it justice. I live it every day, but of course,
is this Markowitz?
Yes, Harry Markowitz.
I think it says like for each. While you're pulling it up, I'm gonna try to summarize it. So for each asset allocation, there is a optimal level of return that you can get for each unit of risk, and if you are taking more risk, then it's an inefficient portfolio. But there's only like a maximum return you can get, and any amount above that return requires more risk.
Right. Yeah. You need to be rewarded for taking more risk. And so putting Bitcoin in the mix, because oftentimes when you talk about modern portfolio theory, you're talking about a mix between stocks, bonds, real estate, commodities, the main investable asset classes. And I've heard, was it Greg Foss?
Greg Foss, yeah.
Remember him on a podcast episode, I don't recall which. He mentioned that there's a study out showing like an ideal allocation for most institutions is like 7% in Bitcoin. So I took to Portfolio Visualizer, ran a back test, basically a 60-40 allocation, three different portfolios.
And that's 60% stocks, 40% bonds.
Yeah, 60% stocks, 40% bonds and alternatives. Alternatives being real estate, commodities, precious metals. But yeah, 60% stocks. That's the important piece here. So in one portfolio that doesn't include any Bitcoin, from 2015 until today, you have a compound annual growth rate, or basically an annual return of 8.7%, with a standard deviation just under 11%. Now, if you throw so now if you put 10% of the portfolio in Bitcoin and just take that out of real estate and commodities,
So still
your
keeping
port
60% stocks,
still keeping 60% stocks.
just
You have,
reallocating the alternative asset component. Okay.
yep, exactly. Just taking other alternatives, considering Bitcoin an alternative. So 10% Bitcoin, 5% commodities, 5% real estate. That gives you a compound annual growth rate of 29%. So we were at 8.7%. Now you have a compound annual growth rate of 29%, but the standard deviation, or the variation of the expected variation of the portfolio, has doubled. So standard deviation was just under 11. Now we're just over 20. Now, if we put 20% of the portfolio in Bitcoin, and in this scenario, we're taking a little bit out of bonds as well. So still have a little bit of real estate, a little bit of bonds, a little bit of diversified commodities, but 20% Bitcoin. Now you have a compound annual growth rate of 45% and a standard deviation of about 30%. Now there's something called the Sharpe ratio, and the Sharpe ratio helps you take into consideration both the return and the risk, so that growth rate plus the expected variation of the portfolio. And in portfolio one that doesn't have any Bitcoin, you have a Sharpe ratio of 0.74. The 10% Bitcoin portfolio has a Sharpe ratio of about 1.3.
So
And
double,
in Sharpe,
right?
yeah. And you want a higher Sharpe, that, higher the better.
Right.
When you add in 20% Bitcoin, the Sharpe only goes up a little bit. It goes up to 1.34. So highest Sharpe ratio when you add in Bitcoin. Again, this is going back to the beginning of 2015. We didn't want to go back to when Bitcoin was trading at $1, or
It just skews it so much. Yeah.
yeah.
Even now, it still does.
But I want to point out, every asset in this portfolio, stocks, bonds, real estate, commodities, Bitcoin, they have all benefited from monetary and fiscal stimulus going back to the global financial crisis, 2008, 2009. From 2015 onward, we've had, really easy monetary policy. And especially in the last couple of years, now we've got government spending that's really unprecedented. So there's the
Right.
fiscal aspect.
Right.
But I just want to point out, this is a good period of time for all these assets. They're all aided by the economic backdrop, but just showing what a little bit of Bitcoin in a portfolio
Goes a long way. A little
yeah.
bit of Bitcoin goes a long way. Your mic is starting to cut out again. I think you got to unplug it, plug it back in. But yeah, dude, and it's true. Now, Bitcoin's volatile, right? But like over time, it should get less volatile too. As the market cap increases, the return and the volatility should smooth out. One thing that I have an issue with in like the modern portfolio theory, the efficient market, the asset allocation strategies, all of that, is that we're looking at nominal returns. And as you mentioned, like at the end of that, was that, all of these have benefited from this monetary inflation. And it's like, it's so hard to get signal when the pricing mechanism is compromised. And I mean, I think like that's ultimately like what I always like I try to go back to again and again is that prices don't make sense. Like there is a lot of economic value being created in other parts of the world outside of crypto, outside of Bitcoin. But I mean, like, DocuSign, just using them as like that's an awesome company, like incredibly valuable. But like digital signatures will eventually supplant that. Like, so like, cause it's like, but there's still value being created there. But like, is that value more than the opportunity cost of just investing in Bitcoin and then the fiat denominated taxes on top of it? Right. It's like, investing in anything in a non-tax sheltered account is outside of Bitcoin in my mind seems really like kind of silly because I know I'm going to eventually sell it for Bitcoin. And when I do that, I'm going to have a tax hit on that. So, I think one of the things like it's just like rate of return, but like in what? Like my rate of return in Bitcoin in Bolivars is like 1,000,000%, right? But it's only, less than 100% year to date in dollars. And I think that if you look at the rate of return in Bitcoin, it requires a paradigm shift because we're not used to evaluating these assets in this. And so it's still, I have trouble like incorporating Bitcoin in the alternative assets part because to me, it's the cash. It's like the uninvested part of the portfolio. So you should be measuring the rates of return based on did it outperform Bitcoin's implicit growth due to just how it works. Like supply shocks happen over time, demand increases, and value goes up in tandem. So,
I appreciate looking at it that way, and frankly, I tend to more and more. But let me frame it a different way. So you're a financial advisor, or you're not I mean, pretend you're a financial advisor, right? Let's say someone comes to you, high net worth individual, and says, Zach, I want to hire you to manage $100 million. And
put it all in Bitcoin.
so now this person
Easy job.
is age 55, retired early. They sold their business. Highly intelligent, not necessarily well versed on Bitcoin.
Mm-hmm.
Now, you want to work with them for a long time because this is basically your retirement plan too, managing this single person's account, or
that
close to it, right?
like that. But like, I wouldn't do that because. All right. Anyway, sorry.
This is a hypothetical.
Yeah.
All right. Okay. So,
but I'm saying like I think that profession might go away, but.
Okay.
But not in the next 5 years.
All right. So you are
just lost all our listeners.
In this scenario, I'm telling you, your incentive is to keep them as a client throughout business cycles,
right,
throughout having cycles.
Right. Right.
How do you allocate the portfolio? I'm sure you're going to provide plenty of education concurrently, but how do you allocate the portfolio so that they will stick with you for the next 30 years?
Yeah, I mean, it's probably I can't imagine having less than the third allocation in Bitcoin. Like if I'm really like honestly answering, I to me like I look at it as cash, and I look at the price to equity of the Nasdaq, which is like where the growth is in the economy, and it's the highest it's ever been. It's .com bubble levels, and that's nominal price. You look at the price to earnings, the forward price to earnings, but then also you really need to take into account the forward inflation rate of those earnings too. And the stock market is the highest it's ever been in history. And for that, I would have a very large cash position, which in my mind is Bitcoin. I would not have any bonds. I just wouldn't. I like why have bonds? Like the whole point like is to beat inflation, and bonds are losing out to inflation. I've been saying like the market's going to crash up. I think we are crashing up right now. Inflation rate is basically the rate of return of the stock market at this point, because equity instruments are savings instruments. But they have a bunch of risks that shouldn't be involved with saving.
Yeah. Yeah. I agree with all of that. I could not imagine if it were up to me, I just wouldn't put bonds into a portfolio right now. I think there's, I mean, I would much rather have gold, real estate,
Anything, literally
anything besides bonds. Yeah,
But like
I
funds have mandates. Like, who's the largest owner of bonds? It's pension funds. It's institutions. Like, they have mandates, so they have to buy. There's a floor, and they're just like, please give me that negative 1% yield, please. Like anything, but what? Put it in Bitcoin, dude. Your pension obligations will be great in like 2 years.
yeah.
But like they can't. But they can't.
Yeah.
They're mandated. It's not like you and I can just like, oh, I want to go do all this now. It's like, no, they have to do a certain allocation and this and that, and requires convincing, a splitting of the sea to change the investment mandate. I mean, you know that personally, like, know, and just your your own experience, like, so.
Yeah.
Well, what else? Do we have anything else today that we wanted to cover?
No, I think
it's been a hell of a recording process.
If you're still with us, thank you so much. Yeah, we struggled to get this one out.
to give the listeners an idea, we started recording this at 10 this morning, and it is now 3 p.m. And I think we got 30 minutes of recording time, and I'll still have to do some editing, but I think, overall this has been good. And one thing I want to leave people with is just a reminder that you should self-custody your Bitcoin. If you have Bitcoin, you should own it. There's nothing like owning it yourself. There's a lot of regulation that's been kind of in the draft stages, and I don't necessarily think that self-custody of Bitcoin is going to be banned. But I would, better safe than sorry. And it's never bad to have options. So just self-custody your Bitcoin, get a wallet.
And if you have questions on this stuff, hit up BTC BAP. That's BTC BAP on Twitter.
Oh yeah, that's me.
And he's happy to help answer questions.
Yeah, and also there's the guys at the pros at Coinbase. They can help out too. So
yep.
All right. Well, your mic is starting to do that thingy again. So next week, Bo's gonna have a brand new mic. I'm gonna overnight him one. I'll send us out since you're buzzing. So this is episode 7 of Value Stack. We will have some guests on probably the next month or two. Maybe Preston will be one, but we've got another guest lined up as well. So keep listening, and we will be back. We're gonna try to do two episodes a month. So expect another one in like 2 weeks, and we'll see you next time. Peace.